Hey guys, how's it going? It's Javon Hyder from Forex to Freedom. Before we jump into our subject matter today, let's get the disclaimer out of the way. As you guys may know, trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Please take a second and read the rest of that statement, and then we can jump right into the material that we have for you today. Okay. Today, what I want to talk about is how technical analysis and fundamental analysis really go hand in hand. If anybody was just to come up and ask me what type of trader I am, I'm going to say that I'm a technical trader. I use charts, very few indicators, but I use indicators and charts to really decide whether I'm going to buy or sell a certain currency pair. Other people use fundamental information like news reports. They look at the economic situation and information on certain currencies, certain countries, and they may make their trading decisions based on that information. Now, like I say, I will tell you that I'm a technical analysis, but at the same time, I pay attention to the fundamentals because I believe you need to do that to put yourself in the best situation to be successful. So I just want to show you a little something that happened in the New Zealand yen trade that I'm currently in. And let me give you a backdrop on it. I got in on this candle right here because I had noticed that the yen had been trading, trending to the upside. So I jumped in on this candle. Then we had, a kind of down day here, another down day, but the market was rejecting the moves down. But then we had a huge move to the downside in this currency pair. But then on today and yesterday, really, it shot back up, and we're back in profit at this point. If you notice, my stop loss is way down here, and I'm gonna go over that in a second. But let me go to the hour chart real quickly and show you something. See, on the hour chart, this currency had been trending down, and then on this candle right here, now that's a massive explosion from where the currency was moving. It was kind of trending back to the upside, but it was doing it in very slow pace. Then explosion, and really another explosion. So what happened? Well, what happened is that the New Zealand yen CPI report came out, and it came out better than forecasted. Let me show you that. If you go over to forexfactory.com, you see at 4:45 p.m. the New Zealand CPI report, which is that red means it's high impact. The actual number came in at 0.1%, and the forecast was 0.0. Let me open this up, show you something else here. If you read right here, actual greater than forecast equals good for currency. So when this report was released at 4:45, it caused this massive move in the market. This bar right here would be the 4:45 bar. If I go to the 30-minute chart, you can see it even better. So after 4:30, from 4:30, this currency moved from here to here, which was a movement of 500 pips, and then the momentum really carried it another 400 pips, so really moved 974 pips. So what I want to say is that even though I was already in this trade in the direction because I was following the trend, the report caused us to be in a better situation in this trade, and that's the fundamentals working with my technical analysis. And there's really no way to get around that. When you're deciding on where you may want to put a stop loss, you really need to factor in that a report could go against you. Now, if that report had went against me, it would have pushed well down, and I would have been pretty much in danger. But I was already prepared for that. That's why my stop losses were set. So when you're figuring on your stop losses, keep that in mind, that you want to make sure that you get outside of what I like to call the noise. Get way outside of where the currency has been in recent times, because one report like that one right there could knock you out of a trade that's actually going to go in your favor sooner or later. So I like to use big stop losses. I like to stay out of range of trouble and violence, and I'll patiently wait until the currency runs in my favor. So now at this point, the currency has a lot of momentum. I'm already in at the right situation. not right situation, but I'm already in the right direction, and I'm at a pretty decent lot size on it. So I'm looking for this currency pair to move up here. Now that it's on the monthly chart, is past a line of resistance now, and it could be on a nice little track to being a large winning trade. But it's because I put my stop loss in the right position, and my technical analysis aligned with the fundamental analysis that came out, and it's just it caused the win or a winning situation at this point in the trade. So just remember, when you're deciding on stop losses, think about putting your stop loss far enough out of the way that if a report comes out against you, you'll still be able to be in the trade. And if it comes out for you, boom, now you're on a rocket ship. So that was the tip for today. I hope everybody enjoyed it. My name is Javon Hyder from Forex to Freedom, and remember to trade your way to freedom today. Bye bye.